Hey, Alicia and Elaine, I thought it might be a little more efficient and effective to go over your guys' spreadsheets in this fashion. I'll try to be relatively quick. I made some notes that we can kind of take a look at here, and I'll include this with an email that I send to you. But a few notes, and we'll go take a look at them. But fuel maintenance on the startup are probably not startup expenses, and likewise your rent expense. You've put some things on that startup that are just actually monthly expenses that'll show up on your income statement. The only thing that should be on the startup are those things that we write a check for, prior to opening our doors. Okay, and then we reconcile a little bit of that when we get to the opening day balance sheet, but importantly on the startup, just those things that we actually write a check for, not those monthly expenses that we're going to incur. Why is there a difference on some things like insurance, right? Well, it's because your insurance agent doesn't trust you, and the insurance agent wants paid in full, maybe for a full year's worth of insurance, maybe 6 months, depends on your age and your company. So we might have to write a check for that, even though we don't really accrue that expense until the month happens. And so I know it gets a little bit odd, but we'll kind of walk through it as we go there. Your cash and bank on the opening day balance sheet, ODBS is opening day balance sheet. That's incorrect. It's got to equal your working capital. Monthly on the monthly P&L or the income statement, your insurance cost would probably be spread across the full 12 months or the full year. On your cash flow, your pre-startup column must match your startup expense sheet. We got to change up your loans and other cash injection. Your cash position at the end of the month, that's in that pre-startup column again, is going to equal your working capital. And then on your projected balance sheet, the historical is going to match the opening day balance sheet, and there are going to be some changes. You'll see the way it looks when we get to the equity position. But let's go take a look at your guys's, and then hopefully cover some of those. And honestly, you might fix some. And then have to come back, and I might have to take a look at it again. Sometimes it's hard for me to know whether or not your cash flow is correct until the startup is redone and done correctly. And so sometimes we just kind of got to fix them. And my advice would be fix these one at a time perhaps, and send them to me and say, hey, is our startup expense look okay? Because then it's easier to move from one document to the other and step to step if we know that the one is probably correct. So let's start up here. So you guys are going to put in $9,390. Great. Okay, you're going to borrow $2,400. You're going to borrow another $1,400 or finance a computer, it looks like, through Dell. That's fine. Furniture, equipment, good. Okay, now here you get to the rental, right? Yearly cost of rental of room in owner's home. Now, if you tell me, if your plan is to pay for that all up front and then, we'll amortize it over the year, we can do that. That seems a little bit odd. My guess is that this is just a monthly expense that you're going to pay each and every month, so it would not, you would zero it out on here, delete it, okay? And instead that will show up on your income statement. Yearly notary bond looks good. Annual premium for full insurance package. Now this one does make sense to me, that you would pay this up front or ahead of time, and then we'll amortize it, or we'll expense that out over the full year. Sorted office supplies, paper, pens, good. This could be almost like your prepaid insurance too, because you're going to buy all this stuff, but you may kind of go through it, as the year goes along. So we might expense that as well. Advertising, okay, again, internet, social, and this might be another one of those things that is that actually what you have to pay up front? Are you paying somebody to prepare a website for you, those types of things, or is this going to be a $300 a month expense? Okay, if this is going to be your monthly expense, then just take it off of here. It doesn't belong on here. Okay, business cards and flyers, yep, you get those ahead of time. buying the website domain, I can see getting that ahead of time too. But this one I'm a little bit concerned about. I think that's probably your monthly expense that you're telling me. Same here, right? And same here. Okay, so you've got a lot of things on here. I think I only listed a couple on here, right? I got fuel maintenance, but this advertising, the internet and social might be monthly. You'll have to tell me, okay? If I'm wrong about those being monthly, that's fine. You can leave them on there. Your fuel and maintenance, that looks like that's going to be for the year, okay? And you probably wouldn't pay for that up front. You might, I doubt it. Okay, internet, phone, cell service, same thing. That looks like that should be $50 a month on your deal. So, reserve for contingencies, please. I've asked folks to please just put, instead of putting that in reserve for contingencies, put it in working capital. I don't know what reserve for contingencies is. It's never made any sense. I don't know why I haven't taken it off of the template. Probably just laziness on my part. Shame on me. But I prefer to have it as working capital. Really, they would be the same thing. Okay, reserve for contingencies, money that you're going to need if you run out of other money or cash flow, and basically that's kind of what working capital is too. So, please, banks have to do reserves, but you guys aren't a bank, so that's a whole kind of a different kettle of fish, I guess. So it may be when we take some of these things off that your owner's investment may be significantly less than that in order to make this balance. Okay, we already see that this has come down because I took off the one deal, the yearly cost of the rental, right? And it may be that needs to come down significantly. Trying to change the bank loan and the other loan because I'd like you to have those on there, but this may come down to just a few $1,000s, and that's fine. Okay, nothing wrong with that. This would be the number that you would probably change in order to make sure that these balance, right? Okay, your total sources and yours were balanced. You did a fine job there balancing them. I just think you've got some things up above that don't belong there. Okay. Then let's go over to your opening day balance sheet. Okay, this is only your working capital. Okay, and you guys have it as your reserve. But if we move that, let's go ahead and move that. We'll get rid of this one. Okay. Then on your opening day balance sheet, this is equal to that working capital. It's not equal to that plus your investment. It's just your working capital. That's the cash that you're going to start with. So what you show there is working capital. Your prepaid expense, you've got a C52. Let me go take a peek at that. See if that's right. I should make this a little bigger. I'm sorry. But C52, I think that is your insurance, and I think that's absolutely right then, the way you have that prepaid insurance, absolutely. So that's good. Okay. Machinery and equipment, that's right. Furniture and fixtures, that looks correct. Your other assets, the Pontiac Grand Am, I haven't figured out. Okay, that might be what you're going to put up for collateral or something. Okay, but that can be collateral without being a part of your balance sheet. This may be a personal asset that you're going to put up for collateral, and that's fine. It's not up here as an asset, or else we'd have to list it as an asset, and sometimes it could be. It might be an in-kind thing if you're actually going to use it in the business and whatnot. But you could also just rent it. If you're using a vehicle, you could rent it to the business, from you personally to the business, which might be an easier way to account for it. So it doesn't really show up on here, and it shouldn't. Okay. I think you've done the debt correctly. That looks right. You've got this debt in here. You've got your other debt down here, long-term debt, and this is both. Okay, yeah, both principal payments. That looks correct to me. Okay, and you can see there then that mine ends up balancing my total assets and my total liabilities and net worth. Your numbers may end up being different than what I have here, 4808, after you've made some of those changes on the startup end and on here. And that's fine if they end up being a little different. So I think that was it for the opening day balance sheet. It's mainly that cash. Okay, so then we get to the monthly profit and loss. And again, I would add, and I don't have this on the note thing though, that you're probably you're probably going to end up with more things on here, you know, that you actually show on your startup that don't belong on your startup but do belong here. So that could be the case. Your rent, those types of things. Now you do have rent expense on here. Okay, and again, I guess if you prepaid it and then you put rent expense on here, you could argue that that would be correct. Okay, you've got this advertising expense on here, so that could be correct as well. So yeah, that advertising expense, you just need to tell me, you know, is that, if it's truly just a monthly expense that shows up on here, then, and you're not actually having to write a check for it at the beginning, then it doesn't belong in the startup. Okay, and the fuel expense, same thing. Okay, and kind of a weird number or two in there. So wasn't that 1,800? Technology expense might have been on your startup there as well, if I'm not mistaken. That's 600 bucks. Yeah. That may not belong on there either, right? Internet, phone, sure. Okay, so guide me through that a little bit and let me know. Okay, I did make one comment that the insurance, instead of having it all come in this first month, I would put it as 75 bucks a month. And the reason for that is because you technically use up that insurance then throughout the year. You pay for it ahead of time because your insurance agent requires that, but you use it up at the rate of 75 bucks a month. If you were to cancel, say here, you should get a refund for, you know, a good portion of this that's left that you didn't use. It looks like you did your interest okay, except, yeah, okay, you changed the formula here, and so it's okay. You've got this entered as a positive number, but you've got it subtracting, and so that's fine. Okay, no income tax expense, so I think other than that, your income statement looks okay. The cash flow, the biggest thing on the cash flow is going to be this. Okay, and what we got to do is a couple things. One, this cash on hand, and at the beginning of the month, just delete that. Okay. This loan and other cash injection is actually going to be equal to, from your startup expenses, just this total here. Okay, this total source of funds. Link it. Okay, now that's obviously that's gonna change if you change some of those things on the startup, taking out maybe some of those monthly things. And then the rest of this may be just fine. Okay. I end up down here with $1,200, so I'm off. Okay, but I need to. I don't put this reserve or escrow in here. In fact, I'm going to get rid of that, because what I want this number to be, okay, this cash position at the end of the month needs to equal my working capital, $2,358. Now, I could just plug that in there, but that's not what I want to do. What I want to do is after I get this number correct up here, then I've got these things that I'm going to expend my money on, just exactly from the startup, right? Just exactly, you know, basically you can take it from the summary. Some of them you might want to break down, okay, by some of the categories up here, but the totals need to be just what this is, so that in the end, this cash position is equal to that $2,358 that we show in cash. Okay, I hope that makes sense. So you might have, you know, the advertising, you might have too much, this telephone, right? Because you got this expense up ahead of time. Now, part of the reason that I think you've got this in here incorrectly is that you're showing it both as a cash expenditure here and as a cash expenditure here throughout the year, right? So you're kind of doubling up on the cash expenditure, and that just doesn't seem right. Okay? So I hope that my explanation of that is okay. So plug away at it. You know, if you have some problems, get it emailed to me, or something. Get it delivered to me so that we can take a look at it and get it back. Okay. Let's go take a look at what else we got on there. So the pre-startup, loans and other cash injection, the cash position. Talked about that, and then also the formula in cell P5, and that one's my mistake, and I thought I had it fixed, I guess, on the template, but I don't. This cell right up here, it's P and 5. Just delete that whole thing. Okay, that screws up the formula that we get down here. Okay, and so if you delete that, the contents of that, the formula or whatever's in there, then your the rest of the spreadsheet should calculate okay, I hope. Okay, next would be the projected balance sheet. Now I'm going to not spend any time on this other than what I put in the notes. I said the historical, and I need to type that in there so it's clear, the historical will match the opening day balance sheet. Okay, it's a little different when you get down here. Your invested capital is going to come from the net worth, right, of the opening day balance sheet. Okay, and then also, and here again, I thought I had this fixed on here. I did another. Add another line or another row, and what we're going to put in here is owners withdrawal. Okay, and that's going to be a number that we'll end up putting over in here, and you'll see that we talk about that a little bit later. So, okay, other than that, I don't think that I have anything else. Some changes in the equity position, and that's those. Elaine, I sent out for business finance, and you can feel free to forward the link to Alesha as well. But I sent out a more complete look at the projected balance sheet, and it's the same projected balance sheet. So take a look at that. And between this video and that video, I hope that there should be enough information to get you guys a little further along on this. Once again, do them one at a time. Do the startup and ship it to me so I can take a look at it and give you the okay. And then we'll do the opening day balance sheet, and then you can do the income statement, and we can kind of plug away in that fashion would be my preference. So thanks and good luck.